If you look at 2016, I think we look at it as a year of delivering on promises. Many of you probably would have spoken to from Sydney via a connection when we were doing this last February. But we got the IPO done. It was difficult markets. We got it away well. We effectively separated from NAB completely, a full demerger plus the IPO, priced at 180 at the time, and obviously it's more attractive today. I think a lot of the promises we made covered not just financial but non-financial targets. If you look at how we talked about the business, we had to change the board. We have 5 new board members in place, all with requisite skills, particular to the business model we have. Similarly, on our leadership team, we had a deficit in quality at the level I required to deliver on what the franchise is, and we have 5 new members of that team. A number of them would be very high level, so the CEO of a South African bank and then running Stan Chart's retail business on China mainland is running our day-to-day SME and retail business. On the risk side, we added somebody who was Mark Thundercliffe, who's the CRO for HSBC for all of Europe. So we brought in very senior, very capable people to bolster the track record we're developing on execution. In addition, we talked a lot about our digital platform. We did launch B. It's live in the marketplace. It's the first artificial intelligence neural kind of capability in the marketplace. It's a platform, not just an application. And we're going to do significant drops on a monthly basis, and we will expand from retail into SME. So the delivery of the platform is the core issue. That's done, and the first capability has been launched in the marketplace off the back of that with very good results. In terms of, we had Brexit, we can talk about that, but we had a capital markets day to try and address that, where we brought forward our targets on our OTE to 2019, when originally it was 2020 for double-digit growth. We also talked about our costs, which we have brought in more aggressive targets on as well. So effectively, we reset at the time, so we were more aggressive, delivering targets earlier, notwithstanding what we saw as possible negative impacts on Brexit. If you look at the financial picture for the year, I think you will have seen it in our full set of results, but very happy with the delivery. We had strong growth in loans, deposits. We ended up with a strong CET1. We were 4% ahead on the cost target, and overall deposits very strong as well. So if you look at all the components of the business, they all tracked very well, in excess of market and in line with what we promised as a delivery when we started out the IPO. In addition to that, we had said that the organic strategy is core. We have to deliver that. And 2016, financially and otherwise, we have delivered, and we're looking forward to then 2017. I won't comment on the Q1 ahead of tomorrow, but I think our ambition is just more of the same. We expect the model to be one of a successful business that will keep delivering on the targets, and those are the medium-term targets we set at the Capital Markets Day and further discussed at the year-end. So I don't think you will see surprises around how we keep talking about the business throughout 2017. The one thing that I should mention is we did put in a bid for another bank, you may have noticed, in the UK. And that was on a very simple premise, which I can talk about generically as opposed to specifically in regard to the transaction. We had said that delivery of our core franchise is key. Nothing changes on that. Regardless of what we do, we will deliver on that core franchise. But we had said that where we saw an opportunity in the marketplace to do something that was entirely consistent with the existing strategy, and by that I mean SME and retail coverage and distribution capabilities in the country, it was at the same time going to leverage, not just for scale, but our scope of coverage across the country beyond our normal regional bias. And thirdly, it was highly accretive to the existing plan of record from a shareholder perspective. Only then and only on those terms would we consider something. So that basis, I think if you just take that away, whatever happens or doesn't happen in the marketplace on an inorganic basis with us will be firmly around aligned to the strategy, leveraging our capability, and immediately demonstrable accretive benefits to the shareholder. And that's the way we look at the business. So that is in play. We can't say anything more about it. We will see what comes of that in the next period of time. Just to close then, I think if you stand back, we have a full board capability, a full team. We have all the product, SME and retail. We have a huge amount of activity which we have underway in terms of the infrastructure and the cost. We're spending $350 million over 2 years on investing in digital capabilities. That is about delivering the best-in-class service, and it is about driving costs down at the same time. Our ambition is very simply to become the credible alternative to the status quo in the UK, to deliver the best-in-class customer experience in the country, to support that with world-class omni-channel digital capability as a leader in the market. So we're putting all of that together as a model, and you will see us setting aggressive cost-out targets for the year, as we have done in previous updates, and they are maintained, and we have expectations that we will meet all of those targets. So it's a business development and restructuring model, and as I said in our previous instances of discussion, this is an execution story. And I'm now very comfortable that the track record, momentum is there, and that the capability in the executive is there, and I have every confidence in a positive outcome for 17.